Hello, everyone, and welcome to our August 2024 update, and thank you for joining us today. My apologies for my voice, but I hope you'll bear with me. Before we jump in, some housekeeping. If you have any questions during the presentation, please drop them in the question box as outlined in the short video you have just seen, and we will endeavour to answer them on air if possible. We will also follow up with an email response. If you've been to our sessions previously, you will know we will try to make our webinars as audience interactive as possible, so there will be no surprise to see we have included some polls to gain some insight into how your businesses run and to keep you on your toes. If you miss any of the presentation for any reason, don't fret, as a recording of the webinar will be made available in the following days, so be sure to look out for it via email. For those who don't know me, I am Peter Mellor. And if you have attended any of the past two webinars, you'll be aware that I've been involved with Super Concepts for over 15 years. I was previously a customer success specialist, but have now moved into the role of Manager Partnerships and Growth. Today, we'll be joined by our Product Design Manager, Reese Hopper. We're also lucky enough to again have Craig Stone joining us. Craig is our General Manager of Quality and Technical Services. Last month, we were able to share that BDO had chosen new SuperMate for the lodgement of the annual returns for their SMSFs. If you've been following SuperMate in the news and on LinkedIn, you may be aware that another leading accounting and advisory firm in First Financial has also selected the upgraded SuperMate as their SMSF software provider. We believe this shows confidence in the ability of SuperMate and are excited to show you a small example of why BDO and First Financial have made this decision. Today, Craig Stone will give you a brief update on the changes to the pension standard minimums, and Reese Hopper will provide a demonstration of a selection of the recent improvements into SuperMate. So I'd now like to welcome Craig Stone to provide some insights into the recently updated pension minimum standards. Thank you, Craig.
Thank you, Peter. It's a good day to be able to chat about SMSF compliance. Hopefully that's come up on the screen now, and I'll just make sure I've got my information there. Excellent. All right, so thank you, Peter, again, and thanks to the team that's been pulling everything together for today's session. We have got a lot to get through, so I will race into the compliance update from an SMSF administration perspective. I do encourage any questions, just pop them in the chat, send them through, and we'll handle those towards the end of the session today. And hopefully, if you have any further questions, you can feel free to reach out afterwards as well. So what I wanted to cover off today was some recent changes that were announced to the SMSF pension regime, particularly SMSFs, because generally speaking, an SMSF trustee is a member and they have full control, full responsibility in regards to the compliance of an SMSF accounting, tax, audit, all of those things, including pensions. And there has been a long-standing industry way of doing things when it comes to SMSF pensions, and just recently the ATO has revised a 10-11-year-old tax ruling, and it's created a bit of a stir. I should have put a picture up of some cats amongst pigeons, actually, which is probably highly appropriate for this topic today. We're going to race through it. If there's any questions, again, please reach out. So the ATO did release an update to this tax ruling 2013/5 just before the 30th of June. They raised some eyebrows when it came to the industry interpretation of the 10-year-old tax ruling and how we've always done things. And I know that doesn't mean that it's right, but the ATO has acquiesced and allowed us to go through in a certain context around pensions, particularly where there is a shortfall of a pension that needs to be paid around the minimum pensions, as well as if there's a transition to retirement pension or TRIS, if you have exceeded the 10%. And that's some compliance issues that have always been bubbling around along in the background. So this tax ruling, income tax when a superannuation income stream commences and ceases, very important, because the big thing that we have when it comes to SMSFs is that right through from starting the SMSF to contributing to rolling over to commencing a pension and then using that tax-free income in retirement, there are certain criteria that you as a trustee and as a member need to satisfy. So tax ruling 2013 was the Bible when it came to looking at when did my pension start and when did my pension cease. And there was some reasonable information in that tax ruling, a whole lot of examples the ATO put together, and also helped with regards to understanding what happens if some of those circumstances happen about taking out not enough pension or taking out too much. And the information that we had on 2013/5 was the ATO published a review, and it was all in draft form back in September last year. And they put out the industry seeking the feedback and also wanted to make sure that they covered off what changes that they were trying to make in a practical sense. In that draft that was published in September, there was nothing new or surprising. And the ATO came out and said the point of the ATO looking at this 10-year-old ruling was to basically go back through the actual text of the ruling and make sure that the 2016 budget announcements that were brought into legislation back in 2016, 2017, 1 July 17, particularly the transfer balance cap amounts of 1.6, which is now 1.7, now 1.9, and maybe 2 million 30th of June next year, we may see. They just wanted to make sure that all of that information that came through made sense when it came to starting pensions and stopping pensions, as well as when funds moved their members from one fund to another, typically defined benefit funds, and make sure that in that situation, the transfer of information and transfer of total super balance information and transfer balance cap information also didn't create issues, which initially it did. So a defined benefit fund in Fund A moving to a defined benefit fund pension in Fund B would, under the old legislation and under the tax ruling that it was there 2013/5, would actually look like it doubled up the transfer balance cap information. So that's just there to review and make sure that was all taken care of practically. The problem is there was a paragraph 20 in the original ruling, as well as in the draft review that was published in 27th of September, and that has caused some big issues in the industry. Now, when I was younger, we used to play Spot the Difference, and I've got a trip coming up, and this just spoke to me. If you see these two pictures, what are the differences? Those eagle eyes amongst us would see there's a cloud up next to the top of the Eiffel Tower in the first picture, but not in the second, and there's a couple of other differences, a few birds missing in the second picture. So in the same way that you can see the differences in this picture, you might be able to see the differences in the original paragraph 20 and the new paragraph 20. And for those who are, again, eagle eyes, you can see that there's a word missing. And the original paragraph 20 says, if the requirements are again met in the following year, this results in the commencement of a new superannuation income stream. But the revised suggestion was just if the requirements are met in the following year, this results in the commencement of a new superannuation income stream. Now, that's only a small change, but what that has meant is that when we read the rest of the ruling, this next section in paragraph 20 is highlighting some big changes that the industry hasn't anticipated and is now in very vigorous discussion. And I'm going to read this out just because it is so important, and then we're going to have a look at some implications of this change. And the paragraph 20 says, if a superannuation income stream ceases for income tax purposes for the reasons outlined in the previous paragraph 18, it cannot recommence meeting the SIS-R requirements in a future year. So if it ceases, then it can't just get back on foot. This means it will not be a superannuation income stream for income tax purposes from the time of cessation, even if the member remains entitled to receive payments from the superannuation fund. For the member to receive a superannuation income stream, any income stream payable from the superannuation interest must cease, for example, by commutation, and a new superannuation income stream must commence under the principles in paragraphs 9 to 13 of this ruling. Now, these words in paragraph 20 are very, very important, and they're very worrying actually for someone who's in the industry, an accountant or an advisor, because it does create some issues. I'm going to put up a few that have been commented in the industry and some recent publications, and we'll open it up to some questions later on if that's important for anyone on the call or later on. And as I say in this slide here, it's not just as easy as meeting the minimum pension in the following year if you've failed to meet the minimum pension in 1 year, and everything continues on, nothing to see here, because here's a couple of issues that might pop up. Under the transfer balance account report, there is a required valuations that are in that report, which are reported as a debit when the original pension ceases on the 30th of June, and then a new credit when the new pension recommences. Historically, because they would finish on the 30th of June and you met your minimum pension in the next financial year, it would then be re-reported typically for exactly the same dollar figure. But now, if our transfer balance account debit occurs on that 30th of June, and then the TBA credit is going to be counted at some stage after the 30th of June, there's going to be a different amount, and maybe it's going to cause excess TBA, or you're not going to use up the whole TBA. So it's something that we haven't had to think about really before, but now we possibly do. In relation to ECPI claim, when we're looking at filling out our annual return, if we're 100% pension phase, then we claim zero taxable income in that year and get all the franking credits back if that's our super funds strategy, or we get an actuarial claim and determine how much we can claim as a ECPI deduction. The ruling is very clear. We can't claim that ECPI in the year in the pension when the pension fails. In the following year, we can only start to claim ECPI when the pension is restarted by the member. And maybe that might not be until September, October, or November, whenever we're starting to do the tax work for the following year. And we might not actually notice that until then. And then we have to consider the significant loss of tax concessions that do apply because we don't have that ECPI. The other issue that has been discussed is death benefit pensions. If you have a death benefit pension running and you don't meet that minimum pension, then you cease as a pension, but because it's a death benefit pension, it must be then commuted back to accumulation and then taken out of the super fund. You can't just restart a new pension based on that death benefit pension amount. There's a couple more here before I hand back to Pete, but a couple that is of interest to our attendees today, I'm sure, because we do have these issues popping up from time to time. I'll just put them all up on the screen here and then we can chat to them. Tax components. If we've got multiple pensions and they cease because we haven't taken out the minimum pension, all of those tax components are likely to meld together And then if we do want to start a new pension, then we've got the amounts of money that are in taxable and tax-free as a percentage across that new pension. An issue if we've got various pensions in there for various beneficiaries at various tax dependency or non-dependency. So something that really, it's not just, oh, I failed my pension, let's restart it. Also, who's actually telling the members to do this? Is there advice provided? Maybe this pension is considered a financial product. And if we're advising to stop and restart, is that considered financial advice, and are we licensed to do that? Do we need a new statement of advice from the advisor in that regard? What happens if during that year of not meeting the pension minimum, the failure to do that, there is no pension on foot? If payments have been taken out, what are those pension amounts? Are they lump sums? What happens if someone hasn't satisfied a condition of release and they're taking their money as a transition to retirement pension? We've now got lump sums being taken out when they're probably not allowed to. And then just as a reminder, if we do have a pension shortfall that is less than 1/12 of the total annual amount, then as long as it's an honest mistake and it results in a small underpayment, quoting the ATO, then that should still be okay as long as we rectify that as soon as practicable after the 1st of July. So that's a really quick compliance update on this particular topic, and hoping that that clarifies a few things, or maybe it asks some other questions for you to think about in your own situations or your client situations. I might hand back to Pete now and get on with the rest of the topic today. Thank you.
Thanks for that, Craig. Not sure anyone saw that those changes were coming. Okay. I'd now like to welcome Reese Hopper to demonstrate the enhancements for processing of property and other changes in SuperMate. Thanks, Reese.
Thanks, Peter. Just share my screen. Yeah, as Peter mentioned, I'll be covering off some recent enhancements, but I thought I would also just cover off just do a general overview and then point out some of the latest enhancements we've done. So it's property processing, some of the letter templates and reporting changes that we've done, some recent updates to SuperStream, and a few other really helpful processing and reconciliation changes. The first item that I want to cover off with the property processing is just processing a property purchase, some of the settlement statements, and a few other changes that goes along with it. All right, let me open up SuperMate. So I've opened up SuperMate. This is the Property Guru Super Fund. The first thing I'm going to show you is we have received feedback that not every property is purchased through by cash and settled. So and of course we're always aware of that, and we've just made the processing of property purchases when it's not through cash a lot easier. So for example, if you were doing a in specie contribution of a property, well, even though this is like a cash amount, I'll just quickly show that if you want to process a property purchase and it's not through cash, you can just jump into purchase property. It will type in new, and when I selected new, it allows me to create a new property account. I will point out that on this screen, like the top part here is just general information to set up the property. We have put in a couple of extra items down the bottom. So I'll just quickly enter the property. Transaction date and the amount. Okay. Some of the additional items that we have put at the bottom of the property setup is the property land title reference, ownership percentage, and related party tenant. And we've received feedback saying that people want to know, people want to track this, people want to store it. And one of the main reasons, and this links in with the letter templates and the tokens that I'm going to discuss later in the webinar. So these three items are generally used in property declarations. So for this one here, I can just go 134 SP, whatever's on the rates notice. Could choose the ownership percentage and then related party tenant. So this is residential. So I do hope the answer is no. But this related party tenant really, it feeds through to a letter token, which allows, when it's a commercial property, you can trigger additional clause to be added to the declaration. All right, so I'll select save. So this is the first change. Well, the first couple of changes, we've made it easier just to process a purchase outside the settlement statement. For people who have been to quite a few webinars, I have shown off this settlement statement, but we've created a settlement statement for when you're purchasing property, and you want to be able to reconcile the cash that goes in and out with all the different various documents that you receive. So your property settlement, your lawyer trust account, any other invoices. This one here, I am going to say it is an LRBA, and this will also trigger that the property's annual return and investment summary reporting categories reflect that it's an LRBA. I'm just going to skip this. So this is the last three items I should point out are also optional. So when you do process a transaction to the property settlement worksheet, you can, like here and now, enter in all the settlement amounts, put in all the difference, make sure there is no difference, and then process the transactions. However, I noticed that there was quite a few cash transactions, so I'm just going to put in the contract date, which is the 9/23, and it's settled end of October. So I'm going to select Save Progress, and as this warning or this information tile says, that you can bring up this this worksheet by processing further cash transactions, or go to the property settlement screen. So let's go save. Just quickly process it. Settlement. Press. Sorry, wrong one. And there's a refund there. Now, as mentioned, now that I've allocated all the cash, I can jump into the settlement transaction screen. I can put in all the details here. We have added this one, this rent adjustment. We did get a lot of feedback saying that on property settlement statements, if they are purchasing the residential property or commercial property, for someone that was leasing it out, there can be rent adjustment put on it. So we have put this field in. You can put 1,000 rent adjustment. I'm just going to put in just some mock details so I can process this. But the goal is to make the difference 0. Once it is 0, I can select process transactions, and it will go off it'll create all the transactions that relate to the property settlement, all the expenses. I'll quickly jump into a different fund where I've prepared a more in-depth property settlement. If I jump here, property settlement transactions. Here's the purchase one that I've completed for 10 Parliament Close. You can see here, you can put all the different cost-based items in, all the different expenses. I didn't put any lawyer fees in. I can select view workflow. View work paper. And it will bring up a work paper which could be used for audit purposes and for team leader review. And it basically just has a summary of what was on the page, where it's all the different rates adjustment, disbursements, settlements, expenses, but it also shows all the different transactions. So by pushing that one button, I was able to process all these transactions, which is quite powerful, quite efficient. If I did make a mistake, I can just simply select reopen worksheet, modify the changes, and then reselect process transactions. And what that will do is it'll remove the original transactions that were posted and then put the updated ones down. Also, if you have created a property accidentally and you've set up all these accounts incorrectly, so for example, you created a commercial property rather than a residential property, you can actually, when the purchase one is reopened, the delete button will appear and you can just delete the settlement worksheet. And when you delete the settlement worksheet, it'll also delete all the related chart accounts. So you don't have to go into the chart and then delete 30 chart accounts that got created automatically. Okay. The next thing I was going to point out with the property processing, we do have a cost base. So sometimes people ask, hey, how do I capitalize to an asset? You know, they've built a retaining wall. It's not a depreciating asset. How do I capitalize that to the property? We have put in aliases for this screen. So if you type in capitalize, it'll come up with cost-based adjustment. We do have this cost-based adjustment screen where you can select the amount, select the screen to bring it up. Then you can select the property that it relates to. The amount came from the reconciliation screen. So if you are doing it off non-cash transactions, you can enter this figure manually and then select save. And that's a quick way of how to enter cost-based adjustments or capitalized amounts to the property cost base. The next thing I was going to point out, I'll just jump back to my PowerPoint. So that was property settlements, processing purchases. The next one I was going to touch base on is depreciation, and I did notice in the poll that it has mentioned that depreciation can be quite tricky for people to process in their software. So hopefully, once you see the changes that we've put into SuperMate, it'll become quite simple. Even though this isn't depreciation, it relates to depreciation, where we do have under assets overview, when you select the asset, we do have a tax offset table tab in it, where you can edit any NRAS that was received. If it is a like a trust or a share, that you can also enter your exploration credits and your early stage investments and early stage VCLP in this tab. We also have the depreciation schedule under the asset So if you do want to jump in and this is a final product of the depreciation schedule, you can also access the depreciation schedule directly from the assets section. As I mentioned, this is the final product. What I'll do is I'll jump into my original fund, and I'll just show you some of the cool things that we've put into SuperMate to help depreciation processing happen a lot quicker. So first of all, simple purchasing it. So if I want to purchase this, process the purchase of this air conditioner, I can go depreciating asset. It's new. Enter the asset name, choose which property it relates to. It's quite handy to select which property it relates to. Firstly, we do group the depreciating assets with the property, depending on in certain reports. But we also, the linking enables you to sell a depreciating asset while doing a property settlement. Okay, so quick purchase, you can just enter the name, what property it relates to, or you could decide where, and you can also decide whether you want to set up the depreciating asset details. So yes, no. For me, I don't actually know all the depreciating methods off the top of my head, and normally when I process a fund, I just want to smash out all the different processing and then loop back around and enter the depreciation method. So normally I would just go save, as in no details. However, if you are one of those people that do, we do provide the fields to enable that. This one here, under $1,000, so you do have the choice whether you can allocate it straight to the low value pool or not. If you do allocate it to this one to the low value pool, any further depreciating assets purchased for under $1,000, we do provide you the warning to say, hey, you've started a low value pool, you should continue doing it. Select yes, that'll create the door and a oven. So yeah, as I mentioned, you can say yes to set up depreciating asset details now. Go diminishing value, 15 years, rate automatically enters. So yeah, this is one of the enhancements we've done recently for depreciating assets. Now, once you have entered all the depreciating assets, as I mentioned, you can jump into the depreciation schedule screen. You can review what it is going to do for that year. So for the 2024 year, you can see diminishing value. This is how much it was bought for. This is how much depreciation amount. This one doesn't have a method, so I can jump in and go, yeah, it's prime cost, 10 years. Select save. When I've updated it now calculates the depreciation automatically for it. Capital works allowance, obviously you can enter it manually. 2020, when you enter it in, we do provide the current financial year and the next financial year. And one of the reasons why we do that is if the property was recently purchased during the year, obviously the first year capital works allowance would be less than the next one. So when I select save, it's going to put 4,000 in this year, 7,000 in the next year. For the people that use Classic, you might notice that in web, in SuperMate, we don't use a deductible and non-deductible fields. We just go with one field, and then based on the ECPI of the fund, we split it between deductible and non-deductible for you. So the benefit for the entering in the next year is that when you do a close, if you don't have an amount in the following year, we will populate it. So going forward, you don't have to enter the capital works allowance because we'll automatically populate it. This year it'll be 4,000, next year it'll be 7,000, and then 2026 will be 7,000 again. So we'll just keep bringing that 7,000 forward for you. And then obviously if the fund's still on SuperMate in 40 years time, you can, or 41 years time, you can reduce the capital work allowance. Yeah. So that is basically depreciation schedule. I'll just quickly jump back into my other fund, which I've prepared earlier, and I'll quickly show you what I meant with the depreciating assets. So if I select edit here, I can see I have a depreciating asset tab, and now that I've entered the contract date and the settlement date, it will calculate the depreciation up until disposable date, and it will also calculate the written down value that's going to dispose it for. And then when it's calculating the settlement transactions, when you enter the capital amounts in, you'll get the capital amounts, and then you'll less the and then it gets split between property disposal and the depreciating asset disposal. And once again, select process transactions, it'll create the transactions, and you can view the work paper to see what SuperMate has done. Back to my slides. This is depreciation. The next item I was going to chat to you about report production and mainly do a quick review of branding, talk about letter tokens and show off the extensive list of letter tokens, how you can fully customize your letter templates, and just some report suite management. Okay, so I'll just jump back into SuperMate. All right, so the first thing under reports, branding, we actually haven't updated this recently. I just want to do a quick refresher so people know that in SuperMate, this is where you go for branding. You jump in, you have a default brand. Under the settings tab is where you can choose whether you want to show sense in your financials, whether TFNs are displayed on tax returns or any other report that contains TFNs. You can put disclaimers, you can put websites, you can choose whether the footer displays or not. And this is the logos and colors is where you can put your logo for your for that brand or for your fund, for your business. You can have multiple brands. So if you're white labeling, you can have your client's brand set up and then allocate the brand to the fund. And this is where you can choose the colors, choose the font that's used for the report header, and choose what type of cover image shows up on your cover page. So you can actually remove this image if you want, and you can put in your own type of image that shows up on your cover pages. We also have the resources tab. So last webinar is showing up the client view. This is where you'd store those resources where clients would log into client view, and then if they want to download fact sheets or forms, this is where you would put them. Next part, with letters and report generation, we do have quite extensive list of letter tokens. And what letter tokens are, for the people who aren't aware, is that you can put a Word document into SuperMate, and then you replace parts of the letter with tokens that will return values that relate to the fund. So, for example, you can put in a letter, and then you can put in the member address or account balance. The address for the chart account used. You can put in trustee names. So you can use the Word document will have the trustee of the super fund's name replaced by the token. We do have, it says 601 records for types of ladder tokens. However, some of these ladder tokens are table tokens, which means that there's a group of ladder tokens within this ladder token. Table tokens are quite handy where you want to put in some details about trustees or certain asset types, and you want a row for each member or trustee or asset type. And basically what a table token is, you can set up one row and then the system will know, okay, I'll just create a row for every trustee. You have 5 trustees, you get 5 rows. You have 2 trustees, you have 2 rows. The other type of ladder token image, so this connects back to branding where you can put the logos in letters templates. Quite handy if you want to brand some letters. And the other ladder token type is calculated, and that just returns the value. So it's basically 1 for 1. I jump back to my slides. I'll just quickly point out over the last few months, we have added a few just to try and automate some of the end of year minutes. We do have clients that come to us and say, hey, I've got this minute that I like to include in my end of year pack, but I can't seem to automate this. So based on feedback, we do create ladder tokens from time to time. And you can see here some of the ladder tokens that we have created were conditional release for benefit payments, pension conditional releases. The property items that I was showing earlier where I was entering in the land title reference and the ownership percentage. These will be the ladder tokens that will return that value if you create a minute for it. Balance of all the credit accounts, listing them out, and we've also created the ladder tokens for 5th and 6th trustees. Jumping back to SuperMate. Letters screen, this is where all your templates are stored, so you can create your own letter templates off the bat. If you do that, I recommend just entering in spell it right. Pension letter. Enter in some name, put in a description, choosing when you want to generate it for, say, end of year, and whether it's pensioner. When you do create the shell for the letter template, what I recommend is if you do have that template in a Word format, you just select upload, you upload the template. Then once it's uploaded, you can select download. I'll just grab this minute of the meeting one because I want to use it to show some of the other capabilities of letter tokens. Yeah. And so it's a Word document. It's got all the minutes. I would upload the letter template, and then if there's certain sections I want to update or want to change, I usually just highlight it. So say, for example, if I want to replace the chair with the actual first trustee's name, I can highlight it, go to my add-ins, and then select first trustee. So on the add-ins, it shows up, and you can just go select which token you want to replace it by. If I want to add in my 5th and 6th trustee, I can easily just add 5th. And then add the 6th trustee name. Another common one I've seen is with the minutes of the meetings. People are replacing trustee meeting date with something like today's date. And it's quite simple to set up these custom letter templates. And then once you've set them up, you can add them to the end of year reporting packs, and the letters get generated automatically. So there's no need to, if you are creating minutes outside SuperMate, you no longer need to grab a template and then make all the adjustments yourself. You can just set up these letter tokens and SuperMate will do all the work for you. When it comes to adding the letter templates to the end of year pack, you'll do that under report suites. I'll just jump into the report suite screen, jump into trial, close. Jump into, so these are all the different report suites that can get generated when you do end of year close. You can add in any report which you want. So I'll just chuck in it's like an asset purchase sold summary, new report shop down the bottom. And then for reports and letters and document slots, you can move it around the reports around, so they're in the order that you want the reports to get generated by. One of the cool things that we've done recently is that we've created the ability to have report suites that include letters that get generated under certain events. So for example, I've added this pension commencement letter and minute letter template in, and I can choose for this pension letter, I can choose whether it gets created for all active pensions, or this one's for pension commencement. So I can go, okay, we'll only do it for pensions that commence for the year. Similar for benefit payments, I can go, okay, well, I want it for all lump sums. Or if I have two different templates, if I have a template for when lump sums are paid out of accumulation, I can say, okay, I'll use that template and say this is for the accumulation ones, this is for pensions, and this is for pensions can be commuted back to accumulation. So you can really tailor these letter templates and then add them in, so they get generated automatically, and you don't have to do anything. If you have a pension letter in your end of year report suite, but you don't have any pensions for that fund, the letter just won't generate. It's quite simple. Contribution, so we've done it for all active members or members with contributions during the period. So that could be quite handy if you want to do contribution confirmation minutes and only create them for the members that had contributions. And here's the property resolution, where you can choose whether for a chart account type letter, you can choose whether it creates the resolution for properties held at the effective date, so i.e. properties still held at the end of the year, or if you have a general minute for properties that were held during the year, and you can do it as all properties held during the period. I'm not quite sure when you'd use that one, but I'm sure someone will find a reason for it. So that's report generation in SuperMate for the end of year and letter templates. The next item I was going to chat about, SuperStream, and some of the ways that we've made it simpler to do to manage your SuperStream in SuperMate. Just jump to here. Looks like my session expired. In SuperMate, on the site overview, you do have a SuperStream card, which has all the different roll-ins, roll-outs, release authorities that need actioning. We also put this information note here just to make sure that it is 100% clear that SuperStream messages do require actioning. If I can either select the chevron to get to the SuperStream screen, or I can jump into rollover release authorities. So just a quick general overview of SuperStream, comparing it to Classic and SuperMate. What we've done is we've we've combined the three fields. In Classic, you have a field for whether it's a roll-in, roll-out, release authority, which direction it's going, which direction the messages are going, and what status. Here we've combined it all, but I always recommend just focusing on requires action. The other thing that's different between Classic and SuperMate is that we combine all the different conversations, like messages within the conversation. We combine them all under the one conversation. So you only have one record, and you don't get confused by why there seems to be like five records for the one rollout, which you see in Classic. In SuperMate, you'll just see the one record. Now, some of the changes we've done recently do involve ability to add notes. So you can easily just type in a note, say, okay, I'll contact the client, yes, no. Release authorities, I'll just jump into a fund. Let's search that. So for release authorities, we have added the badge to say what type of release authority is, so you don't have to go view data, look at the type of release authority. We've received feedback that it does make it easier for people to decide whether they want to action the release authority straight away or contact the trustee and say, hey, do you actually want to pay these excess contributions? Release authority. Processing in SuperMate compared to Classic, it's quite simple. You don't have to go to the transactions page and then process the benefit payment and link it to the conversation. This one here, I can just go, I can either select reject and then choose a reason, or I could go pay. Similar with rollovers in SuperMate, you can just, when you see a rollover, you can just say, okay, well, I'll accept this roll in, and it'll go create the transaction, or yes, let's pay this rollout. It'll create the rollout, and then it'll give you the payment details to pass on to the trustees. Another recent change that we have done is the ability to, if you do have errors, you can dismiss errors. Currently, well, before these changes, if you had errors that they kind of sit there and say, hey, you need to action this error. You need to action this error. One of the things we do is that you can, if you do get an error, you can edit the message that you were sending out. So if there was, say, if the email address was invalid, or the ABN of the external super fund didn't exist, you can jump in and you can update the ABN, and then select resend, and so you can resend the message to fix it. Or if it's just an error message, and say you got an error message from a IRR, like an initial rollover request, you go into the fund, you fix the details, and then just create a new rollover request. You can just simply dismiss errors. So all these different errors, if you can't fix it or you don't want to fix it, you can just dismiss the error. How am I going for time, guys? I think 2 minutes left in the webinar. I was going to go through some of the other cool items that we have released. So a few other cool things that we have released were the add another tick box on all the screens, mid-year close updates, pro-rating pensions, and some of the changes to the annual return. But it does look like I did run out of time, so I'll save them for next month's webinar. So I'll quickly just chuck it back to Peter, and apologies, mate, for taking up all the time.
No worries at all, Reece. So thank you for that. very clear that the developers have put a lot of thought into how properties are processed, and it's great to see. That should save a lot of time. Craig has provided an update to the pension minimum standards and what this could mean if they're not met in a given year, and Reece has shown a number of the improvements that have already been introduced to SuperMate. For those that are not already using the new SuperMate, I hope you're all thinking, it's pretty comprehensive. How do I get involved? So the basic subscription starts at $11 per fund per month plus GST, which gives you access to the Macquarie Bank data feeds, broker data feeds, registry reconciliation with computer share, link market services and boardroom, Data Hero to read bank statements and create the bank transactions from them, property worksheets and standard letter templates, which all reduce the manual intervention and hence the time that you need to provide outstanding service to your clients. Not only that, but for just an additional $4.75 a month, you can get all of this as well as data feeds from over 100 other banks and financial service institutions. In addition, once you subscribe to SuperMate, you become a part of the Super Concepts family and, as such, have access to our SMSF education services provided by Craig, who you heard from earlier. If you need any further information or would like to investigate why BDO and First Financial have decided to partner with SuperMate and how we can make your life and the life of your SMSF clients easier, please contact me via the details on the screen. So now it's over to you. Is there anything that you would like clarification of on what we've discussed today? Don't forget to click on the Q&A in the top of your Teams view to submit your questions. So we've got a couple of questions here already. One that's come through, property settlement worksheet. Is there an ability to add a document to the transaction? That's one for you, Reece.
Yeah, not currently. So you can add documents to our DMS, and you can link it to the asset. And I think there is a document type called settlement document, but it's not directly linked to the transaction. It is something that the team's looking at the moment, where in Classic, you can obviously link documents to transactions, and we're just doing a bit of R&D at the moment to see what's the most user-friendly and efficient way to introduce this to the new SuperMate.
Okay. Cool. And would it be possible to add a subtotal for each depreciable type? So subtotals for your prime costs, subtotal for your diminishing methods, and for your low-cost value pool. Is that something that you've thought about?
I don't think it's something that we've thought about or has before, but it's definitely something we can look at. So we can look at the depreciation schedule, see what it would look like if we added subtotals and have a chat about the benefits of the really, like, realistically, what benefits are we getting out of subtotaling a depreciation method compared to the subtotal for all depreciation assets. But yes, it's something we can definitely look at.
Okay. And I know we're over time, so one final question. What if the property worksheet has been deleted accidentally? Are you able to recover it, or does that need to be reprocessed?
It would have to be reprocessed. We have thought of that, and I probably should have shown it when I was demoing it, but if I go to delete a property settlement worksheet, it's not as easy as, okay, I hit delete and then I hit OK. When you select delete, it does require you to enter the property address of the property you want to delete. So if you do hit delete accidentally on the wrong property, and then you put the property you actually want to delete into the field, it's going to say, hey, this isn't the property that you selected delete on. And so it's going to reduce that risk of deleting the incorrect property settlement.
Oh, cool. It's a good safeguards in place. All right. That's all we have time for. I would know realize we have gone over. So thank you all once again for joining. Thank you, Craig, for your update. And thank you to Reece as well.
Thanks for making it off the deathbed, mate.
I do. Once again, I apologise for my sound. So and don't forget, if you're interested or would like a demonstration or that is more specific to the way that your business operates, please get in touch. Thank you very much.
Thanks, everyone. See ya.